So what is the difference between a pension and a retirement plan? That's what we're going to dig into right now. So congratulations, you have that government job, you've been working for 45 years, slaving away, and you can finally get that pension. Or you're like the other 95% of workers saying, what's a pension, right? Well, that's what I want to address today is what's the difference between these plans, between a pension and a retirement plan, and really what are your options to make sure you have a comfortable retirement? Okay, so first and foremost, pensions and retirements. Pensions are dying. This is no secret or no surprise. The only people that typically have a pension plan anymore these days are government workers. You're either like a teacher, you might work for a government type of VA hospital or something like that. It's very, very rare to see pensions anymore. It's really just government employees. So like I said, maybe about 5% or so of the country even has this option of a pension. Now pensions are interesting because they're kind of the old plan they used to have, right? They used to be the plan of saying, hey, you work for us for so many years, you get that gold watch. You know, mine's not gold, it's Garmin, but you can imagine what it's like. I never got my gold watch, but you get that gold watch or whatever, and then you finally get that money that's in there. Now it could be a certain amount of sum of money they have, or they might even just say it's a sum and or a retirement stream you get for the rest of your life, which is awesome. It's great to have that sort of option for yourself. This is why many teachers stay in the education space, because they want that little extra, really that extra income stream to keep coming in, because isn't that what you ultimately want at the end of the day? When it comes to retirement, you want that income stream coming up. You want that income. Ideally, it's better if it's passive, but we'll talk about that a little bit later. But that's the big thing, right? So you're getting that pension income stream coming in, but you have to do it for a certain amount of time. Even for many of my friends in the military, same thing. They got to be in it for at least their 20 years, if not longer, depending on what they're trying to do, what their positions are. And of course, that retirement plan that they get, that pension that they get, can actually pay out. But for the vast majority of us, we don't have that anymore. Why? Because companies stopped giving them. That's why. One, when it came to pensions, they would try to pay you for the rest of your life. Well, people have been living longer. It makes it harder. By the way, we talk about infinite banking on this channel. Did you realize that a lot of the companies, even like General Electric, companies that are like the big companies back then, paid their pensions using life insurance on their employees? Yeah, that's right. They actually built up the life insurance. Then what they do, they end up paying out the pensions from the cash value of the life insurance, that savings account that's in there, and then when they died, the death benefit would replenish the pension fund and keep it going forever. Well, a lot of companies didn't want to do that as much anymore. When we moved into the 70s and going into the 80s, everything was about profit, right? Get that share price up, more profits for the owners and the investors, So it became very, very heavy on the kind of the butthead capitalist side versus the nice capitalist side, right? And so that started happening, plus the government realized that Social Security, which is what other people were trying to rely on too, if they didn't have enough savings or a pension coming in, Social Security was going to go bankrupt. So they, of course, got together with the financial companies and said, listen, let's put the responsibility back on you as the employee, right? Instead of you relying on the employer to take care of you for your life, instead you got to take care of yourself. This is why a lot of us Gen Xers are like, we're latchkey kids, right? We've been left on our own our whole lives. We're going to be on our own when it comes to retirement, And that's kind of what happened here, is that they said, well, let's give them this 401k plan, right? And they can do IRAs and things of this nature that have been now more available to middle-class Americans. And that's where we come to today. We got these retirement plans. You got your 401ks, your IRAs, your Roth IRAs, things like that. Some you can do through companies, where they'll often give you a company match or some kind of benefit there. There are other companies that also give you stock shares, right? That can also kind of help boost some things up. That actually helped my dad, for his own situation where he was fully relying on his retirement plans. He also had company stock shares that helped stretch out his money just a little bit longer, a few years longer for himself. Those are the kind of things that you get. But the truth is that we really can't rely even on these retirement funds because, for example, Fidelity, they came out their numbers last year in 2023. They said that only 810,000 people out of their 45 million clients, only 810,000 have at least $1 million in their accounts. Now, granted, yes, they might have multiple accounts. That could be why it's split between that. But it's not hard to imagine that most of these people probably have one account with them and it's not $1 million. And it's not just because people aren't saving a lot of money. There are a lot of people. I talk to them all the time. You're probably listening to this channel right now. Some people are max funding their 401ks up to the legal maximum that they can do, and they're doing Roth IRAs, and still it's not turning it into enough. And so although they're throwing all the responsibility back on you, saying you take care of yourself, because you don't have a pension to worry about, and we're not going to give you any kind of real Social Security, anything to worry about, because 2033, they might have to lower their benefits by 20-30% from what they're telling you might get. So it's all on you. So how do you make that work for you right now? What can you actually do about it? Now, if you had to pick between the traditional financial plans that you're given with a financial advisor, you got your 401ks, IRAs, like traditional IRAs, and there's even like SEP IRAs and all this other kind of stuff too. Roth IRAs would probably be my favorite. Also, health savings accounts. If you haven't been doing that, this is kind of a bonus. It's not a retirement plan, but as a bonus, health savings account could be a great way to get your money working for you now for things that you need today, including health expenses. The cool thing is, many people don't realize this, you can do a one-time transfer from your IRA into a health savings account and pay no tax on it, and then still use it for your bills. So that's one thing you might be able to do as a little bonus for you. You're welcome. Now, Roth IRAs, like I said, are better, but remember, they're still government controlled plans. Government sets the rules for what happens. So that 59.5 age rule, if you try to access your money before you're 59.5, with any qualified plan, they will penalize you with a 10% penalty, and then if it's taxable, there'll also be income taxes on top of that. Now, a Roth IRA, you won't have to worry about the tax piece. But if you withdraw your gains before you're 59.5, they will penalize that portion of 10%. So of all the things, Roth IRA is great because it's you put it in with after-tax dollars, grows tax-free, comes out tax-free. It can be a wonderful option if you're waiting till you're at least 60 years old to retire. But what if you want to retire sooner? What if you don't want to wait till you're in your 60s or 70s to retire? What if you want to do it sooner? What if you want to actually have income coming in because even though you've been saving up for so long, it's just not enough? And you're getting sick and tired of your stupid financial advisor telling you, well, if you just save more, you'll be okay. Well, that's where these alternative investments come into play. Because guys, it's not about how much you accumulate money. It's about the passive income you can create. And I love passive income, and you should too, because that's money you're making whether you work for it or not. Here's the problem with a traditional retirement plan and the way that they've been doing it. They've always told you to save up as much as you possibly can, let it grow and compound, gamble in the stock market. Hopefully it keeps going up, but it might go down from time to time. It will go down from time to time. But then hopefully you retire when it's on an upswing, not on a downswing, right? And if it goes down, well then just wait another 5 or 10 or 20 years, and then you can finally make it because now you're almost dead and you have very few years to live. Not my recommendation for you, okay? And here's the other problem I've seen too. Even as a financial advisor, I wanted to retire early as a financial advisor. My whole goal was if I can be cheap enough through life and save and pack away hundreds of thousands a year, if I can do that, then I can retire on $2 million because the traditional financial plan will say you can live on 3% a year if you're trying to retire. Now, granted, if I were really trying to be real about this, if I'm trying to do it in my 40s, that should be a 2% type of living on just because of inflation and everything else, possible down markets and whatnot that could interrupt what's going on. But again, 3%. I was hoping for $60,000 a year. I thought over 20 years ago that $5,000 a month was a comfortable lifestyle. But now with inflation, is it comfortable? Heck no, it sucks, right? Like $5,000 a month is not great if you have a family as well at the same time. It's very hard to live on that kind of money. And I know there's gonna be some of you commenting like, I can live on $5,000 a month just fine. Well, congratulations. I'm glad that your girlfriend left you and you're living in your mom's basement now. I know you're like, that's so offensive, Chris. Well, so is your comment. So take that, okay? The truth is, $5,000 a month is nothing to brag about, okay? Especially depending on where you live in the country. You live in New York, you live in California, $5,000 a month is almost poverty, okay? Now, if you live in the backwoods of West Virginia, yes. You can live in Mississippi, yes, $5,000 can go a long ways. But for how long? Because eventually, inflation is going to catch up to that too, and then $5,000 won't seem like anything. So remember, I was hoping that I was going to live the dream, live a very comfortable lifestyle at $5,000 a month, and I'm so glad that wasn't the case. Because the truth is, saving up $2 million to live on 3% or really $5,000 a month isn't really realistic. Now most people want the same kind of lifestyle at least $10,000 or $12,000 a month. That means I have to have anywhere from $4 to $5 million saved up in mutual funds. Do you know how few people have actually ever achieved that, even though they are ultra penny pinching savers? Almost no one. And so this is what rocked my world. That's why in 2006, I quit being a financial advisor because when I saw the real numbers, I saw that the stock market didn't return 12%. It was returning more like 8.4%. And then if you throw in dividends, maybe 9.5% if you're lucky. If you're lucky, most time it's like maybe 8 to 9% if you hope and pray and get a good long-term return in that. Well, when those numbers being less, inflation being higher than what the government tells you to be is because they're trying to keep Social Security alive longer, right? So they're telling you lower inflation numbers so they don't have to keep raising the rates for their people that are taking Social Security benefits right now. You throw all that together, you realize it's going to be almost impossible for me to do with mutual funds. This is why I went to the alternative investment game. This is why I started looking at things like real estate investments. Because here's the deal, guys. Like, even when I take a money and put money in an investment, if I put that money, say it's $100,000 in an investment, making 10%, I'm making $10,000 a year. $100,000 from a traditional retirement place at 3%, I can only live on $3,000 a year. So understand, guys, if you want your money to last longer, if you want to be able to live on it, it's not about accumulating money, it's about the passive income that you can create. That is how you can overcome any pension that you may or may not have, as well as retirement that you may or may not have. I'll give you an example. I had a client named Dan. He worked for the military. He actually had a little bit of that government pension coming, but he still wanted another $100,000 a year coming in. He went to his financial advisor. He said, I've got $1 million. What can this produce for me? And the financial advisor said, 3%, $30,000 a year. And Dan said, that's not cool. Like $30,000 a year, even though I got a little bit of income from the government, that's not enough. Not enough to actually live the dream that I have in my 60s. And so when he found us online, thanks YouTube, thanks podcast, right? He found us online, started listening to our Money Ripples podcast. He said, listen, I got to do something different. He did. He took his $1 million and now it's producing anywhere from $100,000 to $130,000 a year. Guys, that was a drastic difference. Plus he's got his military funds that he has coming in. Now he does whatever passion projects he wants to do. That is the difference between having just having a little bit of income to kind of live on a meager living, which is what most people are doing, versus if you use alternative investments, not just worrying about the traditional retirement plans. And even though he did do that for a long time, he still had to turn it into income at some point. That's where alternative investments can be better. Now you're probably wondering, how did he figure that out? We actually have a passive income calculator on our website at moneyripples.com. If you fill it out completely and fully, you'll find out that you'll have a number there. Whatever that number is about how much passive income you could potentially create in your situation if you invested that money today. So go to moneyripples.com, try out the passive income calculator right now.